We have the unthinkable is happening. Right, Jerome? It is bad. I'm going to show you the loudest warning in over 40 years. And this guy right here, Jerome, he is showing you this is where the stock market is. And let me show you. And I'll draw it for you. He wants it to go this way, down. But you damn retail investors, what are you doing? And no one is believing this guy, even the bond market, which I will show you. It's saying, sorry, pal, that was it. I hope you had fun. And tomorrow should be a big one. We got CPI print. But this is my headline, a closely watched indicator. Oh, I'm going to show you some indicators too. Make some paper trading money based on some indicators. A closely watched indicator of a coming recession is blaring. Well, you don't know what it's blaring because I got to move my screen a little bit. There. Is blaring the loudest warning in over 40 years. Well, what could that be, Johnny Bravo? Well, I've been telling you forever. It is the bond market, which tells the stock market what to do. Actually, the bond market tells Jerome what to do. Jerome doesn't do anything. He just tries. They just try to yap the little jowls, and hopefully, which they do, they seem to listen, so it's okay if you have that much control. But it is the bond market that will tell you the future of the stock market. It'll tell you the future of economies. You just have to understand it. Look up Jeffrey Gundlach. That's not how he says his name, but Jeffrey Gundlach, he's saying the same thing. I'll show you in just a minute. The Treasury yield curve on the 2 and 10 is at its deepest inversion in 40 years. So when it's going one way, well, it's guaranteed 100% of the time it's going to flip. You can't have the short end up there and the long end down there. At some point, it's going to reverse. And a lot of banks like to borrow on one end and then loan on the other, but it's opposite. So they can't. These are your non-primary banks like Rocket Mortgage or whatever. It's not your main ones. The ones that sit at auction and buy bonds, which we've had a strong, I think it was the 10-year. Everything's good. Bond market's telling you. You may say that you're going to raise rates, but the yields are coming down and have been coming down. Sorry, Jerome. Look at the 10 years. So for those of you that are thinking about refinancing or buying a house, follow the 10-year, learn how to do charts, and then you can go, oh, so it's going down. Huh, that's so weird. Yep, he can say anything he wants. He can go, you know what, we're going to raise it 2,000 basis points today. That's it. Tears up his speech like he did last time. That's it. We're going to kill the markets. No, the 10 years telling you sorry. Then I've told you that the Fed follows the 2-year. They don't follow the 1, they don't follow the 10, not the 30. It's the 2, like lockstep. And then when those cross, well, that means that's it. They're done, and they're pretty much at the end of done. But the yield curve is notorious predictor of a recession that we are currently in. But if the administration says we're not, well, then we're not. And preceded the downturns of 90. We got 2001, 2008, and 2023. And the Federal Reserve officials, they're coming out in droves saying, we mean business, are making a full court press effort to convince you investors they won't be slashing their benchmark interest rates before the year's end. Nope, not this year. No. We're going to keep going, even though the bond market's telling you otherwise. And we could listen to these ladies and gentlemen's Fed no rate cut mantra rejected by markets seeing recession. Yeppers. Look at your 1 year. It's at 4.7. I don't know. Maybe I'm getting too greedy. I really want to give me a 5. I'm going in. Easy money. 5%. That's stupid me. When you wait just a little bit too long, you should have grabbed it. But whatever. It is what it is. They follow this one right here. It's the 2-year. The 2-year is even dropping, Jerome. You think that one's dropping? Look at okay. Here's your here's your 10-year. Huh? Yep. Coming on down. Bring it down, baby. 30-year, same thing. Looks about the same, and that is called inverted when you have the 30-year at almost 4% and you have the other end going the other way, which I'll show you with this chart. Okay, see that red line over there? Oh my gosh, I've never seen it like that. I used to teach that in school. See the red line? And I tell, if you kids ever want to know when a recession is, get this end up here and that end down there, okay? Now what's going to happen is it's going to revert. Like the short end's going to drop back down just like it always does. Also bringing the stock market down like here. See how it was up there? It was inverted, okay? Like that. All right, so that was back in 99. I think 99. Yep. Y2K and then crash. It comes down. Stock market comes down. It goes back up, right? It inverts and crash, right? The other end comes down. The short end is going to come down to zero. It's just going to. It has forever. That's the problem with our monetary debt-based system is this is how it works. I don't want to go into detail, but just know by the charts, crash down to zero on one end, and even that other end looked pretty bad. But then Jerome be talking that thing up, and now we're up here. Look, we're right there. Can I go any farther? Is that it? That's it. Okay, I can't go any farther. So when this side comes down, that side's going to come down. It's going to be like just flat. When that happens, TLT shoots up. Yay! That is my, I took out that play on April Fool's Day. Well, that's what I remember. It was April. So 12 months, I get to exit that position, and hopefully I'll be in the red. And scratch that. I want to be in the black. I don't want to be in the red. Red's not good. See, I want to be in the green. Show me the money. I just thought 12 months would be a good play. I'd avoid some of the tax, but it is what it is. Also, yesterday I had mentioned, and you guys were asking about Nat Gas. Oh, I thought did I add it? On Nat Gas, there's ETFs, okay? I said we are at the bottom. All right, so let me show you something on Nat Gas. And again, you could look up ETFs on it. You Google natural gas ETFs, and then you could trade ETFs and not NG1, all right? But I've made you, 63.63%. Take that off the table. I need to show you some things. Also, this is not financially. This is just paper trading here. Looking at going back to Nat Gas, if you guys want to catch a falling knife, a pretty good zone. I'm just saying, using this indicator. Yes, it's in my bull market and in my bear market course. You turn on this one green indicator. So you're buying in this area. Look, here, I'll draw a line. Let me help you with this. So this is on Nat Gas. Also, when I heard Jimmy talked about it. He said, good time to booyah. Good time to buy. So usually whatever he says, you should do the opposite. So don't take my advice on this one. But right here, look. Okay, so there's one. You're basically right here. Do you see that? Let me change this. This is when Nat Gas was about the same spot. Yeah, right about there. Yep. That's a bottom. That is a bottom indicator right here. Let me do it again just so you can see it. Yep. And the indicators, yep, these are all in the course. So if you want to know how to grab bottoms, yeah. Get you in trouble at the bar, though. So here you are again. But you could wait for a reversal. Bravo, I'm up almost 1% today, so it's reversing. Okay. I just like those perfect trades. And I love looking above my head. 30-year yield down 2% today. Yeah, okay, Jerome. Yep. I see where you're going with that. Gosh, that is like complete opposite of what he wants. Something what I was telling you about, and I said Jeffrey Gunlock was telling you about, because we look at bonds. You got to understand bonds before you can really understand stocks. Stocks is just the beauty pageant that everyone loses their money on, unless you know how to trade it, right? Oh, swing up, out, in and out. Bond market, yeah, whatever. It's just that is what the entire world is. It is a debt-based bondage system until it gets changed. Hopefully this year. Yeah, I'm excited to own nothing and be happy. The highest yield on the U.S. Treasury curve is the 6-month T-bill. I'll take it, 4.8. Okay, maybe I'll grab that one. I'll grab a 6. There is no way the Fed is going to 5%. The Fed is not in control. The bond market is in control. That is correct. Check. I mean, guys, grab a 6-month T-bill at almost 5%. What are you waiting for? But I know you are like, oh, did you see Powerball is worth $1 quadrillion? And if I could just win that, and look at me, little Johnny Bravo. I sit here all day long. I will bunt. I have bunted every day. I just get on base. Just get on base. I have only hit a home run one time in my life, and that's when she said yes. I know. Look at how sweet you are, Bravo, you little simp. Wait until she takes half of everything. You're going to be changing your tune. Okay, so we have, look at this, guarantee bond. So when I jump up and down over the last 6 months, and I have, right? Higher yields, headwinds for stock make 2023 the year of the bond market. One money manager sees a once-in-a-decade opportunity in corporate debt. And just in case you wanted to know the ticker symbol, and also this is just the funniest, stupidest thing I've ever done. When we had, and I did it on the channel. I mean, usually my calls are pretty right. Also, my okay, so I have a swing trading course. You did that one. Bear market course, you're doing that one. Okay, you're learning all the little things like left shoulder, right shoulder. Okay, take advantage of that. My bear market course price has to go up. I'm just saying, this was an introductory offer, so if you want to grab it before it goes up, it will be going up. That's my warning. I gave it to you. Looking at this, see this green area? That's why this is where I started to accumulate. Actually, right here, like an idiot at what, 130, right at the head and shoulders. And I'm like, oh, it'll come back. I listen to the charts. Don't listen to me. Looking at this, see, this is where you accumulate. These are the bottoms. These are the bottoms. These are the bottoms. No, that was not the bottom. Well, I mean, no, that wasn't the bottom. All right. This zone, this is your double bottom on TLT. Okay. That's it. You had it. And I told you, I said, that is it. I've been saying that for months. This is your double bottom. Look, see, went gray. Now you missed it, but whatever. It's a swing trade now. It's a swing trade almost on the monthly. So get ready when that little, when the Bravo 9, okay. Let me move this so you can see it. Move this over. See, this blue line crosses that red line. Or when it looks like not like that. Sorry, I like to do lines because it's just easier. Give me one of that. Bring that candle right above that. I mean, it's the bond market. Come on. Also, this is that Lux Algo zone that I was telling you about, that it's like once in a lifetime when it gets into that area. Some of you cats really listened to me on that one, so congratulations. And also, if I were to do this on Nat Gas, look, you're actually not even in that zone, on that Lux Algo zone. Nope. Got to go all the way down there. So there is still room to the downside, so be careful. That's why Papa Bravo likes the swing. You might not get the bottom, but you'll get the reversal, right? It's just like safety first, kids. Remember to put on your BCGs. Always use protection when making that trade. Also, warning Will Robinson, tomorrow CPI, flawless indicator, signals big CPI miss tomorrow. So exit prior to CPI. And tomorrow should be a volatile day, especially when hedge funds, who were always on the wrong side of the trade, hedge fund shorting of tech stocks, they have all piled in. Enjoy your short squeeze, kids. Hits record high Goldman Prime fines. That's what happens. Everyone's like, oh, it's all going down. All it takes is a little pop, and then like cover the positions because you got to buy it back. And then they buy it back. And then this guy has to buy it back. And everyone has to buy it back. Those are called bear market rallies, and they rip your face off. And you know me, I don't like getting my face ripped off. I can't when I'm bunting. That's why I say exit prior to earnings. I don't know which way it's going to go. They could be lying. Who knows? So I exit. I wait. Okay. And then I just wait for setups. That's all I do. You're like, that is so boring, Bravo. You just sit there and I'm like, nope, not yet. Just wait. Okay, there we go. Again. And you just make that little snowball get bigger and bigger and bigger. Also, I just threw this in my notes. I couldn't believe this. The House just voted. And also, by the way, I will never do a video. I've done 2. Those were my worst videos when I talked about how you lose money in those guys over there that they don't carry pocket protector anymore. They carry guns. The House just voted to repeal funding for Biden's 87,000 new IRS agents. Yes, Thank you. Every Democrat voted no. Tells you all you need to know. I mean, am I missing something? Like, I don't want more IRS agents. You do? Maybe you're like, yeah, I always try to understand both sides of the argument. Yeah, we want to go after those that don't pay their fair share. I'm like, well, they're going after people like who are using what, $600 a year? Was that $1 a day, $2 a day? Because you Venmo'd me for mowing your lawn? That's just absolutely crazy. But okay, you guys. So be careful of this. Be careful of this man. He's trying to take your beauty pageant away. So again, let's get out there and bunt. If you haven't, do something. Click a button down below. Helps out the channel. I love you guys, and I will see you tomorrow.